But to Alex's point, though, is that, gosh, I forgot where I was going with this. I'll just drop it from there.
Welcome to episode 51 of Farm to Markets. Today we are talking about the Strive asset management model, if prime ministers should be allowed to party, and we have more lightning round questions at the end. BlackRock, the world's largest asset manager, who is most commonly known for its low-cost exchange-traded fund offerings called APE Shares, has not been shy about the way it uses shareholder votes to advance its preferred political views. Obviously, this has caused some outrage from shareholders with differing political views, but it has also been the impetus for a new fund management company known as Strive Asset Management. Strive, like BlackRock, will provide low-cost ETF offerings, but what makes Strive different is that they promise to use shareholder votes to advance policy that focuses solely on delivering excellent products and services. Do you think Strive's business model is viable?
Yes, I do think it's viable. The funny thing is that what Strive is trying to do is, in general, how investment firms used to operate by and large. It's only been in the last decade or two that these have really started getting focused on driving what's called ESG investment, which we've talked about in the past, environmental, social, governance. But it really says a lot that it's considered a novel idea that an investment firm wants the companies it owns to focus on revenue and not on social policy. That being said, I think there's a market for something like Strive these days because there really hasn't been an alternative in a while now. Get woke, go broke. Quote unquote has largely been up to now a myth. I mean, brands have lost money or customers in the short term or made people angry, but by and large, because there haven't been opportunities for other large investors to put their money into alternatives for the big funds from places like BlackRock, and BlackRock and others are using their, billions and trillions to push companies to do these kinds of things. The companies have said, well, if we lose $1 billion in sales, we don't really care because if we get delisted from iShares, we're screwed. So hopefully for me, this starts to at least give a viable alternative for these companies to say, well, we don't really care, BlackRock, if you delist us because we'll be on whatever Strive's funds are called or whatever their ticker symbols are. And, maybe this will lead to several others to do things in the same way. So I think it's a positive. I think their asset management model is going to be totally fine. I think after, they may not blow up immediately, but after a while, I think they'll, unless they have mismanagement, they should be, a big player in the years to come. And again, I think that's positive.
I think just coming out of the gate that they've proven that they're viable. I think in the first week, they were able to capture over $100 million in an investment to launch their fund. So yeah, the answer is yes. There certainly is a market for the counter voice for political discourse in the marketplace that we're currently experiencing. This whole idea with BlackRock and Vanguard and State Street using their shareholder rights to vote within their core index funds. When you think about just how was it $313 billion BlackRock has in an S&P 500 fund that they can vote with those proxy shares for all those stocks that make up the S&P 500, they can control or at least have a huge impact on corporate boards and those sorts of things. This is a good idea for people who want to fight that battle. I'll say that at Coco Enterprises, we're not going to go buy Stride asset management funds if they're underperforming. They're going to have to compete for performance just like every other fund. But the AARP, the American Association for Retired Persons, became so woke that it became possible for the Association of Mature American Citizens to come out as a viable alternative. So if you're over the age of 55 and you want discounts to movies, you can either join AARP and lean left, or you can join AMAC and lean right. I think Strive is a very similar analogy.
I absolutely think that Strive Asset Management is a viable business model. Just to kind of echo Alex and my dad, it worked before, so I think it'll work again. This was the pendulum, before, and then it kind of started to swing in the direction that was beyond the bottom line of just making profits for the shareholder, and it was going in a direction of other things like wokeness. So I think people that want to return to that old model will certainly do so.
I should have talked a little bit about how ETFs work, but when you buy an ETF, you don't actually own the underlying companies in the ETF. What you own is shares of the fund. So the fund, for instance, like BlackRock will go out and buy shares of Coca-Cola and Exxon and all these in different companies, and then they'll securitize that, put them in a fund, and then but instead of selling you just a slice of Exxon in your piece of in your share of the fund, what they do is they sell you a slice of the fund instead of a slice of each one of the shares. So what you actually own with an ETF is a share of the BlackRock fund instead of the underlying companies. So that's how BlackRock gets to vote on these, is that BlackRock actually owns the companies in their fund, and you just own a share of BlackRock. So that gives BlackRock the right to vote all those shares. And what Strive is doing is basically they're saying, we're going to take your voting rights and we're going to do something that's basically specific to the operations of the company. We want to make the company better, and we want to make people better doing that. And then that's it. I mean, their strategy for doing that is vague. I don't know if you can find more on it in other places, but it's basically a one paragraph sentence from what I can say on how they're going to do that. And ultimately, what I guess I would like to see is a fund asset management company basically say, we have the right to vote these shares, but what we're going to do is that if you own a share of our asset management company, we're going to basically type this up into easy to understand language, send it out to all the shareholders, let you vote, and then we'll basically kind of like a poll, and then we'll take the results of that and then vote in accordance with what everybody who owns shares of our fund think. So I think that would be a better idea, instead of like the fund company just making the decision for everybody else. I don't understand why they don't just simplify the language, let everybody decide what they want to do, and then take the results of that and then vote the way their shareholders want to. I think would be a better idea.
Unless Larry Flink goes out and buys all the shares of that ETF and then essentially votes the way he does right now.
Yeah, you're right. He could do that, but I don't see that realistically happening.
I think people would start to gravitate towards whatever votes they want to vote towards, and you get funds that are more woke, more funds that are not so woke. I think it's important to note that just because you're not a woke political fund doesn't mean that you're racist or sexually assaulting your employees or clubbing baby seals. It's kind of like being certified organic or not organic. The stuff we grow on our property, Dad, it's not organic, but we're not sprinkling used motor oil on it. Just because you're not woke doesn't mean you're a bad fund.
Yeah, and I agree. And I'm just curious though, like how many of these votes are going to come up where there's going to be some underlying political issue? I mean, is the company just going to abstain, or how are they going to identify that, and what criteria they're going to use? Because it's not on their website that I can see.
Well, what I read between the lines is that they're essentially just going to put pressure on the companies, just like shareholders used to put pressure on on companies before ETFs ran the whole show. When individual investors and institutional investors owned Exxon and McDonald's and Cisco and all these other companies, they would say, go out there and add shareholder value. That's your job, board of directors. That's kind of what I think Strive Management is trying to get back to. When I first came in the industry, we didn't have the internet, but you would get these annual reports in the mail, which were these huge tomes that were several hundred pages, and they were all talking about how they were going to add shareholder value, how we were going to take McDonald's stock, which is selling at $60 a share today, and we're going to do everything in our power to make it $80 a share next year. That was what they were shooting for. Today we have the internet. And if you go to the websites for all of these companies in the Fortune 500 companies, you wouldn't even know they were in the shareholder value business. They're all trying to clean up the environment. They're all trying to have a board that it's got one Sikh, one Muslim, one lesbian, one black person, one white person, one female, one disabled person. It's like their whole world evolves around these woke things as opposed to their job being to add shareholder value. Strive is just trying to get back to that old model.
Yeah, and to add to that, from what I've read, it sounds like in some of the interviews that I was reading that they're very strongly suggesting they will be anti-ESG in the way they vote. That when those kinds of things come before, boards of directors or come up for shareholder votes, they will actively vote against them, not just abstain or anything else. It sounds like they actively want to keep that out of business, unless for some reason that makes the company more money.
All right, let's move on to the second question. So at 36, Sanna Marin, the leader of Finland, is the world's youngest prime minister. Recently, videos emerged of Marin partying and drinking with other Finnish celebrities. Political opponents to Marin have called into question her ability to make important decisions at a time when security has been elevated due to the war in Ukraine. Do you think these concerns are valid, and should political leaders be able to party if they want to?
Well, to a certain extent, I don't think there's too much wrong with cutting loose every once in a while. I mean, nobody would really complain if it was a bunch of 70-year-old white guys drinking brandy and smoking cigars and getting hammered. But because it's, a 36-year-old, dancing to European rave or whatever, it is kind of weird. So to an extent, I don't think it's that big of a deal. But the other angle I'm going to come at this from is that it seems the optics are terrible. It seems to be a perfect indication of just how unserious many of our, Western allies are about the security situation in Europe and have been for decades now. Whether or not they are serious, the optics have been for a long time that they don't care, and America will do the dirty work when push comes to shove. So to me, that just, when you're being fast tracked into NATO and your country is supremely concerned about a possible Russian invasion, and you're at what appears to be a Coke party with Finnish celebrities, and you're getting handsy with people that aren't your spouse, that's a really, really bad look to me. So should they be allowed? I guess, but when the actions don't really match the rhetoric, I just kind of roll my eyes and say, if you guys really are serious about being this concerned, maybe it's not a great time to be, partying, I guess. Bad look.
When I was in the Marine Corps, officers were held to a much higher standard of personal conduct than other people in the military. I would define what Prime Minister Marin's activities were conduct unbecoming of a prime minister. The shocking thing is not that this 36-year-old got caught on a video cutting loose. What I find shocking is the amount of support that her electorate has offered in light of this. They share a border with Russia that's 836 miles long. The bear can sniff across the border. Weakness in Finland. I'm concerned that we're letting Finland in at the same time they're electing prime ministers that are this stupid. So yeah, she's allowed to do it. But I don't know if I would trust a prime minister who's not smart enough to stay off social media when she's cutting loose.
I agree with you too. I think it's rather unbecoming of someone in her shoes. But let the people of Finland decide if they want a prime minister that's a party girl. More power to them. Let them deal with it. I wouldn't vote for her based on her behavior, but that's just me.
Drew and I were talking about the return on headache this morning. Kind of a play on return on investment. And in her case, it's more of just a return on ROJ, or return on enjoyment. So hopefully the enjoyment for partying is worth the headaches and the bad press you're going to take to do it. So I don't know, but okay. All right, let's move on to the lightning round. All right, so last week, AMC issued shareholders a new share class called the APE Share, which stands for AMC Preferred Equity. The APE Share is essentially a share of preferred stock. Does this entice you to buy AMC?
So I actually have a handful of AMC shares left over from last year's stock trading competition that we do in our office. So I will be receiving APE shares, whether I want them or not. The interesting thing about this is that they're kind of a backdoor way to dilute shares. The CEO of the company tried to sell a bunch more shares to raise capital, and AMC shareholders voted it down. For the main reason is they're trying to repeat a short squeeze with AMC, and diluting shares would not work for that goal. So this is kind of a way for the company to dilute shares basically, while also trying to get existing shareholders, many of whom are retail investors, excited about the prospect, especially naming it after the Reddit apes who own AMC shares. So sorry, this is not exactly a lightning question, but yeah, I'm going to get them whether I want them or not. And I think the whole situation is funny. So
absolutely not. Is that like if my cousin Billy wants me to give him $10,000 to invest in his company as a common share stock, and everything that Billy touches in the marketplace blows up, I'm not going to buy Billy's preferred shares just because the illusion is that somehow they're safer. AMC has already got enough struggles with their common shares. You're not going to entice me with your preferred shares.
I was never interested in AMC pre-2020 or post-2020 or not now. I suppose if I had to choose to buy either common shares or preferred shares, I would opt for the preferred shares. Preferably they're non-callable and convertible. But otherwise, I don't think I'd touch AMC with a 10-foot pole right now.
Yeah, companies struggling tend to offer preferred shares over common shares or debt. Mostly because they don't really have to, as long as they're not paying dividends on common shareholders, for common shareholders, they don't have to pay them on the preferred shareholders. And then a lot of the performance for preferred stocks is tied to the yield that the fund pays. So if interest rates are going up, that actually hurts the performance of the preferred share. And then there's also the fact where if they are callable, if interest rates do go down, AMC would most likely just call those shares and then issue a share at a lower rate. And then you get more protection than a common shareholder does in the event of bankruptcy, but they still have to pay all their common debt owners first. So I don't know. That's not really enticing, and it diluted the share, like I think Alex said. So that's not really helping on either. But it was a creative way to create some cash for the company, and then also creative way to label the preferred share that I'm sure would entice some people to buy it. Yeah. All right. So apparently in Europe, so most of you have heard of the Big Mac, which is made out of meat or hamburger. But apparently in Europe, McDonald's has been testing the chicken version of the Big Mac, and apparently it's done really well. Well enough where they're going to bring it to the U.S. and then next month start testing the chicken version of the Big Mac. Are you going to try the chicken version of the Big Mac?
Maybe. I guess it depends on how much it costs. So I ate a lot of McDonald's as a kid, Every once in a while, we still go, especially if we're just grabbing something to eat on the road or something like that. The thing is, the Big Mac has gotten more expensive than just buying 2 McDoubles and stacking them up, with the primary difference being shredded lettuce, not on the McDouble. So if I can get 2 McDoubles for like $3 and stack one on top of the other, why would I ever pay, $5 for a Big Mac? And I think it's probably going to be the same with stacking up 2 McChickens compared to a Big Mac with chicken on it. Which I think the only difference would be pickles. So probably not, because it's probably going to cost more than just stacking 2 Big Mac or 2 McChickens on top of each other, but I might, just for the heck of it.
When I eat fast food, I don't order chicken sandwiches anyway. I confess I do like the Big Mac. Alex is my economic hero for buying 2 McDoubles cheaper and stacking them together there in his car. But I don't see myself buying a McChicken sandwich anytime soon.
I've never had a Big Mac in my whole life. Never had one. I really don't eat fast food. So the fact that they're putting chicken in it is not gonna change my behavior.
Alex is the consummate analyst. I mean, I've never ever paid that much attention to the McDonald's menu in my life. Alex, you may be your economic hero. He's my analytical hero for actually going that in depth. You should write a thesis or something on that. But I've tried the Big Mac. It was okay, but we haven't been to McDonald's in years, and I just don't see myself going there anytime soon. But I mean, if they want to do the chicken version of it, that's great. Go ahead and do it. But I'm probably going to pass on it. All right. Last question is that some companies are starting to fill cans with water. So basically, what they're doing is that they're taking a normal aluminum can. They're putting a really fancy logo on it, kind of like you would see on a beer can or on a hard cider. And then they're giving it a really cool name like Liquid Death. But inside the can, they're just filling it with water. So for instance, the people who make Liquid Death have basically just filled the can with water from the Austrian Alps. And then they're selling it for $1.29. And is this something you would buy, or is humanity just peaked?
So the article you sent about this, the headline was a little bit misleading, I thought, when I read the whole thing, because they lumped in canned water with all kinds of other non-alcoholic beverages that are showing up that are supposed to be replicating things like beer. And those, so Athletic Brewing is non-beer. It's never alcoholic, but it's beer-like, and it tastes like beer. And some of that's actually pretty decent, especially for, if you're a pregnant woman like my wife is, who can't have beer right now, that stuff replaces it well enough. Canned beer, canned just regular old water or spring water, I don't think it's that surprising. I mean, we don't really complain about bottled water. Well, some people do, I guess. But I see it in the same vein as that. And one last thing before I go is I've actually seen canned water for a long time on airplanes. If you can actually ask them for a can of water if when the drink cart comes by. I've done it before. So canned water is not really that novel to me. It is weird seeing crazy labels on it, though.
I generally don't like the taste of liquids coming out of a can. I prefer tasting liquids when they come out of glass. If I'm driving through Prescott, Arizona, and it's 115 degrees, I have a hard time buying bottled water. I usually go over to the kitchen area where they've got the hot dog rotisserie, and I fill up my water bottle, and then my conscience requires me to buy a couple of nut rolls just to make sure I'm not stealing something from the convenience store. But I can't see myself buying canned water.
Alex, I'm surprised you wouldn't buy one and just refill it from your own tap. Being the McDonald's analyst that you are.
Oh.
But I could see myself doing that if I really like the aesthetic of the can, just buying one and just refilling it wherever I go. I have seen the cans before, and I do have a couple of friends who are not drinking alcohol anymore, and it looks like a can of beer. So when they're at social gatherings, I don't know, it helps assuage some of the social pressure, I suppose. But I have no problem with it. If that's how you want to spend your money and there's a market for it, buy $1.29 per can liquid water. Go for it.
Yeah, I mean, as a person who drinks carbonated water frequently, you've heard like Polar Seltzer or, LaCroix if you want to be fancy. I enjoy that. So, if it's a hot day and, they have like the carbonated version of it, I might buy it. But I don't understand, maybe Drew answered this, but, one of the reasons in the article for having something like this is to make something that's healthy seem unhealthy. And I don't know. I don't get it. There's never been a stigma in my mind about drinking water. And I didn't realize there was a market for it. My last comment will be to analyze Joe's choices of drinking out of a gas station tap versus buying because if it was me, the sink that's usually by the hot dogs is usually, in my mind, pretty disgusting. And I'm not sure that 2 nut rolls is going to make up for not buying a bottle of water, because in my mind, like 2 nut rolls would probably be more than like $1.50. So I mean, I think I would just go with the carbonated water and avoid the nasty sink by the rotisserie hot dogs and just use that.
It's a philosophical position. I just have difficulty buying water when it's everywhere. I've often said that one of the best stocks to own is Coca-Cola, because they convince people to buy bottled water when they get tap water for free.
Yeah, I don't know. But when I understand your philosophy, but when I'm standing face to face with the hot dog rotisserie sink, I'm probably going to go ahead and buy some water. All right, that's it for episode 51 of Farm to Markets. We'll do this again next week.